This is total growth investing, where price growth is not enough. Dividend growth is not enough. We want to find stocks that grow in both of these categories. And if we can find them, we can beat the market. Please remember, I'm not a financial advisor. Nothing I say on this YouTube channel or anywhere else on social media should be seen as financial advice. This is my opinion and speculation based on my experience and my research. Please don't place trades based on the opinions of others. Base them on your strategy, and base your trades on your own research and due diligence. Good luck. This series of videos will be doing a basic review of the top stocks on my Total Growth Investing ranked watch list. I have 673 stocks on that list, and I want to focus on the top 10. Let's talk about MarketAxess. This is a stock on my list that I've been wanting to talk about for a while. You'll see why on the stock price in a little bit, but first let's talk about what the company is and what they do. MarketAxess is one of the youngest companies on the top of my ranking list. It was only founded in 2000. And I found this interesting on Wikipedia. McVeigh, who is the chairman and CEO and founder, Richard McVeigh, proposed the model for MarketAxess in 1999 as part of a Lab Morgan program from JP Morgan Chase, designed to back executive ideas for using web-based technology. Remember, 1999, the internet had only been active for about 4 years, and people were really wondering what could they do with this new platform, the World Wide Web. Well, he proposed selling bonds and creating a way for buyers and sellers to find each other online. What was the latest thing to do that with? Well, all the hype is Robinhood and Webull and all of the other exchanges that people use all over the globe for stocks. And MarketAxess Holdings was founded to bring the same kind of technology to bonds. Let's take a look at their homepage. So I just watched this interview with Jim Cramer, and this was done about 2 months ago, the video was. It talks about the first month of the COVID shutdown, and it was a really interesting interview. The main point that I got from it was when everybody was sent home because of COVID-19, they didn't have their Rolodexes, they didn't have their regular phones. Everybody went online, and MarketAxess became the place for bond traders who were used to doing everything by phone to finally find a way to make connections online. They have been doing really well during the COVID-19 shutdown because bond traders have no choice but to find a way to keep going and keep buying and selling. Over 1,700 firms are now using their exchange platforms for corporate bonds, municipal bonds, sovereign bonds from all over the world. And I think that's just going to continue to grow. And a lot of other people think that too. Their IPO was in 2004, initial price $11. They've gone up. They started paying dividends in 2009, growing it every single year by a lot. Products, like I said, high grade, high yield, emerging markets, Euro bonds, municipal bonds, corporate bonds. Okay. First impressions. Their stock price? Well, when I wrote this, when I prepped this slideshow that was 519.52, they've dropped down to 489.83, so market volatility. But still, look at this. This was the bottom over the last year, their 52-week bottom, 275.50. I think that's right here. Okay, they this was the first month, and then this is when the bond traders started finding them and creating accounts so that they could continue to do their jobs. And they have done really well. Um, Customers, like we saw, 1,700 institutional investors and broker-dealer firms. They're active in the United States, Europe, and Asia, and they're expanding beyond that. Their current market capitalization, $19.68 billion. They're in financials and financial exchanges. Here's their price over the last 10 years. Let's look at that on Seeking Alpha. Go to Momentum, go all the way down to the bottom. There it is. So this is 5 years, here's 10. So 10 years ago, they were at $13.19. Where are they now? 489. Remember, anybody got a time machine? I don't need a hot tub, just a time machine. This growth is just incredible, and the fact that they've spiked so high after the COVID shutdown is making me really wish that I'd owned this a long time ago. I want to point this out. Right now, this is 3,848.70. That is the top 10-year total return on my TGI list. Dividend history and growth. Over 20%, 5 years running. Let's look at that in specific. So 2143, 2518, 2609, they've been growing for 10 years ever since they started paying their dividend. And they do pay quarterly. Their last increase was in February, and they jumped their dividend from 51 cents a share to 60 cents a share. And they've been doing these quarterly increases every year. So here's 4 quarters, 4, and that goes all the way back. So they are increasing every single year and doing specials every once in a while. Like every other company, they're doing a whole bunch of acquisitions. So in 2012, partnership to link up with BlackRock's Aladdin platform. And that's why they suddenly had that big influx of money that enabled them to do this special dividend. And their next dividend, actually their last one, it paid on May 12th. It was announced on April 29th. Let's go to dividend news. So the one that they announced in January, paid in February, was a 17.6% increase. Like I said, it went from 51 cents to 60 cents. So we've got a 60 cent in April, and we've got 2 more at 60, and then we'll see if they can continue to rise. Because they've been doing so well, I would not be surprised to see another rise. Yield on cost. This was interesting. Let's go to dividends, yield on cost. So if you bought it 5 years ago, you'd be earning 2.52%. Let's take it out 10. 17.94% yield on cost if you had bought it in 2010. This spike right here, which takes it up to 58.02. Okay, this was in the middle of the economic crisis in 2007, 8, 9. That's when stocks really depressed and some people got a really good deal. This is when I really wish I had a time machine to be able to go back right here and buy this stock at their bottom. If I can do that. Yeah, right around here. It's kind of hard to control the mouse that detailed. Anyway, what else we got? Total return. This is just 10 years. 3,996.72. Okay, these numbers keep moving around, but if we go to momentum and down, so price return versus total return, you can see that the dividend is really small, so it doesn't make that much of an impact. But at those levels, does it really matter? Honestly, yes it does. Let's take a look at the scorecard. Their current dividend yield is 0.49%. Really low, but we've already looked on yield on cost. Their payout ratio is 33.84. Plenty of room to grow. This is what is really capturing my attention. The growth rate, which we've already seen. But now let's look at the potentials. Okay, here we are. Dividend Stocks.cash. They have all three awards. They've got the Dividend Bunker, Dividend Sprinter, and Earnings Rocket. They have a dividend stability of 0.9, earnings stability 0.9, cash flow stability 0.94, revenue stability 0.96, extremely stable company. And except for the last little drop that we've seen, it's green all across the board. Here's their 15-year price change, just price, 41.29.97. Let's take a look at fair value a little bit. Remove the extra stuff. Here's just price. Is it overvalued right now? Probably. In fact, yeah, it is. But here's earnings per share, and the estimates show that it will continue to grow. I think these estimates are wrong. I think it's going to grow even faster. We'll see. Here's adjusted. Here's cash flow, which is the yellow that you could probably barely see, but fair value based on earnings per share, fair value based on adjusted, and fair value based on cash flow. So these show fair value all the way down here. So that means it is extremely overvalued right now. If you bought it right here and planned to sell it at the end of 22, you'd lose 321 out of 1,000. So don't make that your plan. This is on my buy list because I'm looking at this and I'm thinking and dreaming 5, 10, 15 years down the road, and I think they're going to do well. But for short term, you might want to look for another buying opportunity if that's your thing. MarketAxess Holdings, bringing the bond market into the 21st century. What do you think? Tell me in the comments. Thank you for watching. If you liked this video, please click the like button and subscribe to the channel. I'll be recording more stock reviews like this on my top-ranked total growth stocks on a regular basis, so be sure to hit the bell to get notified when I post a new one. If you want me to do a specific review, please feel free to let me know on the discussion tab here on YouTube or on my Facebook page. I'm always looking for stocks that can help me and you beat the market over the long term.